Welcome to AI Mortgage News, your home for the most critical updates in the mortgage market and the broader economy. I am your lead anchor, and today is Thursday, April 9th at 9:08 a.m. Eastern Daylight Time. We are looking at a market that is currently drowning in a flood of data, but refusing to budge an inch. The overnight session leading into this morning's open was completely sideways, especially when we compare it to the volatility we witnessed yesterday. Even a boatload of economic data line items did absolutely nothing to change the narrative. Expectations for a market move were not high to begin with, but the lack of reaction is still notable. Let us look at why. First, the GDP for the fourth quarter and the monthly PCE for February were released. However, both of these reports are simply too stale to matter to current bond trading. The market has already baked in those numbers weeks ago. Next, we look at jobless claims, which presented a bit of a mixed bag for analysts. Initial claims rose substantially, which usually signals a softening labor market, but continued claims fell off a cliff, reaching their lowest levels since May of 2024 in a normal environment. This might cause some ripples in MBS pricing. But again, bonds have done nothing with the data. Trading levels are almost perfectly flat as we start another day of watching war headlines across the globe. The geopolitical risk is currently outweighing the domestic economic data. This means we are back to a headline-driven market, where the next move in your mortgage rate might depend more on international conflict than on a government report. Stay tuned as we monitor the 10-year yield and MBS spreads throughout the day, because in this environment, silence is often the calm before the storm. Make sure you are talking to your lenders about locking strategies while the market remains sideways, because the next headline could change everything in an instant.